Brought to you by Ayoko, Africa's leading integrated technology services company. Welcome back. Now, MTN expects a sharp increase in annual earnings. Headline earnings per share is projected to skyrocket by over 1,000%. This largely thanks to a dramatic turnaround in Nigeria, while Ghana also sports a strong set of numbers. On the other hand, Irancell, in which MTN holds a 49% stake, remains a frozen asset, with the company unable to extract any gains from the region since May 2018. And as tensions in the Middle East rise, what does this mean for MTN? Business Day's Mudiwa Gavaza joins us with his take. Mudiwa, thank you so much for your time. Always appreciated when you come through. Perhaps let's start by putting MTN's exposure to the Middle East into perspective.
So, until recently, let's call it 5 years ago, there were four main businesses in the Middle East. It was Afghanistan, it was Yemen, it was Syria, and it was Iran. Those are the main MTN entities in that region. They began a process of divesting from the Middle East, announced the plan in 2019, and they have since sold off the Afghanistan business as well as the Yemen business. Syria, they abandoned. Basically, they got into a tiff with the government there. And then they were just like, this is, to use their word, untenable. And then they just wrote it off and, said, we're done, we're leaving, right? That was in 2021. And this week, the development that we saw in Barcelona at the Mobile World Congress was MTN and the Syrian government coming back to the table to say, okay, right? We left, but we actually need to leave now. Right. So imagine you're living with someone and then you're like, I'm done, I'm leaving, you go. This is them now coming back to get their things, right?
I was going to say back to get love back, but clearly they still want to leave.
They still want to leave, but they're here to formalize the process to be like, okay, I might have left a couple of things, I'm here to fetch those things. Whatever I need to sign to say I'm leaving, this is the formal process.
Quickly on that exit, the exit out of Syria then, does what's currently happening have any financial impact on MTN's earnings?
For now, I don't think so. And the reason I say that is because in 2021, they wrote off the business. So to my understanding, if there's any assets or anything like that may be sold off as part of the process, that part I'm not too sure about. To our understanding, MTN held about 75% of that business, and then the 25% was held by the Syrian Sovereign Wealth Fund. So when they exited, they basically just left it, and it was left in the control of the government, essentially. And the MTN brand has actually continued, since then. It's just called MTN Syria. But MTN doesn't account for it at all in their earnings, because as far as they're concerned, they were done with that particular business. So that's where we're sitting now. And the other development from this week's meeting between Syrian authorities and MTN is that now they've begun the process of, now that we're formalizing this thing, we can actually move the license out of MTN's name and invite people to actually come in and bid for a 20-year license to take over. What I find interesting about this is that the structure is interesting, because most of the time you come and you bid for a license. But at least the way that it's been worded and it's sort of being presented is that they're basically saying to investors, there's an existing business, which is MTN Syria. Come and take over MTN Syria and the operating license for the next 20 years.
Okay. No, that is interesting. All right, let's get into the sticking point, right? And that is Irancell. That unit has, largely been in the news on the back of the U.S. sanctions. Now, with those tensions in the Middle East escalating. Does the current geopolitical environment make it even harder for MTN to structure an exit?
I'm going to say no.
Okay.
And the reason I say no is not because this is not more complex or doesn't add more complexity, but in terms of the fact that they've already tried so hard to exit that business already. Whatever is happening now doesn't move them forward or backwards. They're almost just sitting in the same place.
So are we going to see another Syria exit?
That much I'm not sure about. And the reason I'm saying that is because that's a unit that they've just held on to, right? They hold about 49%, of that business. It seems that in the assessment that they've made, right, this is something that they would want to actually do a proper exit of. And when I say proper exit, I mean actually get value. Remember what I just said about the Syrian situation? They wrote it off and they said, we're done.
Yeah.
Wash their hands left. But I think the Iranian business is so big, right, that they're at least wanting to get some money out of that if they're going to exit it, as opposed to just writing it off. I don't know if what I'm saying.
No, I hear you.
Yeah, if what I'm saying is making sense. So, to my estimation, that's one of the big sticking points that I can see, because yes, they could have probably said we're done with this many years ago, but they've probably plowed so much into that business, and because they have so much money that has been stuck there, they probably want to be able to get something out as part of their exit, which is why they've probably just stuck with this thing as much as they have up until now.
And I'm wondering, with everything at play, how then the Middle East as a region fares as an investment destination, right? With MTN going through what it's going through, I'm sure other telcos companies are looking at the region as a no-go area.
It's an interesting one, and I say that because right now, definitely, it's a very tough time to be operating a business in the Middle East, especially with all the literally the heat on the region at the moment. That's one. Secondly, is the fact that some of these conflicts, wars, sanctions, all of those different things make it so hard, to operate, such a business, because you might say to yourself, okay, no, we'll just continue to operate our business in Iran. That would then have implications for maybe the rest of your operations, right? Because now you are continuing to deal with the sanctioned entity. What does that do to your ability to borrow money? Your ability to have people investing, in your business, as MTN. So those are all, some of the issues. However, the point I will make is that some of the issues that we do see in Iran and some of the issues that they have faced across the Middle East are not necessarily unique to the Middle East. It's just that the Middle East is that perfect cocktail of different headwinds. Because if you look at some of the things that they have faced in Africa, right, next door in Eswatini, right, on a number of occasions, switch off the network, right? In a place like South Sudan, that's a war-torn, part of the continent where they've, faced some of those conflicts. Your infrastructure is being destroyed or bombed, in some of those areas. So as hard as it is to operate in the Middle East, some of those circumstances have also been faced in some of their operations.
So these dynamics are not unique to only the Middle East. And I mean, they've managed to survive so long. So I guess they can keep holding on. Mudiwa, we're going to have to leave it there. Thank you so much for your time and sharing your insights. That was Business Days, Mudiwa Gavaza. Brought to you by Ayoko, Africa's leading integrated technology services company.